All right, we are just 1 point away from session lows right now. By the way, session highs for the Dow, up 88. All you have to do is look on your screen to see the swing we've endured now. We're down 34 points. We're watching the markets very closely here. We thought, let's bring in somebody who could take money and move it today if he wanted to. Skybridge Capital founder Anthony Scaramucci runs a fund of funds with what,
13 billion.
Sorry, I'm sorry, I'm missing the one there. 13 billion in assets. And Charlie Gasparino.
I got $3 of my money.
It was $3 billion, and hopefully it'll go to 16 before it goes back to 3.
Okay, I need to get to Anthony Scaramucci first.
Listen, I mean, two questions that were not answered.
Well, wait, before you do that, did you, anything she said say to you, let me deploy some money here and move it?
No, I mean, we're well positioned. Stay in structured credit and fixed income that has been mispriced due to technical selling related to the Volcker rule. But the two questions that were not asked to Chairwoman Yellen, number one, what is the impact to GDP from Obamacare? Number two, what is the impact of productivity to Obamacare? And I think what you would find is that Obamacare has slowed down the economy. I'm not saying it's a full percentage point of GDP, but it could be 50 basis points to 75 basis points.
Let me just get something out here because we're required to do it. We need to just say that Anthony raises money for Donald Trump's campaign, so we just need to get that out there as well.
But this is not really a left or right thing. It's about what Obamacare is doing to force outsourcing to part-time employees.
But here's where it is.
It's bad policy. It's not left or right. It's right or wrong.
Let's be real clear here. Janet Yellen is a spokeswoman for the Obama administration in many ways. I mean, people forget that. They think the Fed is independent. It is, I think, in certain measures. But one thing she has to do in this is basically say to the world, the economy is not that bad. We're not going to raise rates, but it's not that bad.
Charlie wants everybody to hate him.
That is, no, but that's what she's saying.
Janet Yellen.
No, but that's what she's saying. The economy is not that bad.
She's not a spokesperson for
Of course she is. Of course she is.
Was Ben Bernanke a spokesperson for President Bush because President Bush appointed him?
He was more independent, I would say, than she is. I'm just telling you that this is a very. She has to walk a political tightrope in an election year, where she's got to say she can't attack the president, the person who appointed her, by saying you created this crummy economy. But on the other hand, she's not raising rates. I mean, if there was not, that wasn't a ringing endorsement of this economy, what she said. I mean,
she's got to raise rates, though. I mean, so at the end of, well, I think she's got to raise at least 2 more times in the next 4 quarters. Oh, for a lot of reasons, but the main reason is she's going to miss the move to curb inflation.
Didn't they miss the on-ramp already?
They probably did, but so therefore then you're just bolstering my evidence that she has to raise rates. But the other reason,
inflation, and you're going to strengthen the dollar.
You need to raise rates so you can cut rates. You've got 400 basis points of necessary stimulus.
If you raise rates right now, you will strengthen the dollar. You will already weaken other economies.
Not 25 to 50 basis points.
Well, listen, the market will absorb. The market did not absorb it the last time.
Well, for a retail investor, Anthony, who's watching this, you know, we just had David Stockman, get out of stocks, run for the hills, get out of bonds, get out of everything.
I thought he was more bullish than ever before, David. I mean, listening to his apocalyptic stance on everything.
Under your Tempur-Pedic.
Yeah, I just saw David in the green room. I said, hey, man, I'm getting ready to buy stuff based on that.
But Anthony,
tepid apocalypse.
There are great U.S. companies right now that pay nice dividends.
High-yielding dividend stocks in a deflationary environment are the best way to go. So go with the dogs of the Dow approach. Go with big fat moats around businesses like a Kimberly-Clark, a Pfizer, things like that, and stay in the game. Don't get knocked off course by Fed speak or anything else. Have a well-diversified asset allocation plan.
I would say I would agree with that generally, except for when you had this much monetary stimulus for this long, and you got this type of global economy. You know, this is not a time to be buying stocks. I mean, let's be real clear. I'm not saying sell your portfolio.
Jeez, you know, some of the best investors would say, we're waiting for Brexit Day. We're waiting for the volatility, so we jump in when the market temporarily falls.
Charlie has a point, but let's just say there's also $2.5 trillion of cash on the balance sheet. If you get some kind of corporate tax reform in the first term of a Clinton or Trump administration,
that would be great.
That would start growth.
But at 17,000. 17.6, I don't see, there's not a lot of upside to buying this market.
Now, isn't it interesting, because we started to see the volatility index drop about 7% during the day, and it has come up, and now what we see is fear coming back into the markets here as we have wiped out most of our gains, if not all of our gains. And here you can see, this is the intraday picture.
They're staying in.
Well, it's interesting. The polls say...
Polls say otherwise, but the market says that they're staying in.
Yeah, that's true. It's interesting. Professional gamblers like Anthony... No, no, but professional gamblers... No, if you look at the betting odds...
I am, actually.
The betting odds say... And they're usually right, the betting odds guys. They're saying they're staying in. There's no doubt about that. You can do some research. Google it. The polls are saying they're getting out. But
Same thing happened before the Scottish referendum, and the polls are going to tighten. And one of the things that, we had a couple of UK government officials not allowed to talk about it, but one of the things they've shifted on the campaign is the actual cost per citizen of leaving the EU is going to be blanketing the airwaves next week. And so I do think
there's one intangible, and I would say that's terrorism.